Hello and welcome to PinChuTV. This is the Philippine market wrap for January 11, 2026. On this podcast, we break down economic and investment news from the Philippines and Southeast Asia in a way that is easy to understand, especially for beginners. Before we begin, a quick disclaimer. This podcast is for the general information and market commentary only. It does not constitute investment advice or recommendation to buy or sell any financial product. Please make investment decision and based on your own judgment and responsibility. As we enter 2026, some investors are saying PSE is coming back. Rate cuts may be coming. Maybe the bottom is in. You can feel a bit of optimism returning. But today, I want to be very clear. This market has not truly recovered yet. Recently, the head of Philippine Stock Exchange, Ramon S. Mondon, made a striking comment to the press. Recently, the head of the Philippine Stock Exchange, Ramon S. Mondon, made a striking comment to the press. He said, if nobody goes to jail, nothing will change. That is a very strong statement. But this was not political rhetoric. It was a market reality. We often hear about GDP growth, interest rates, and valuation metric like P/E ratios. All of these matter. But in emerging markets, investors look at something even more fundamental. For example, are the rules enforced? Are powerful people held accountable? And when something goes wrong, does responsibility follow? Trust comes before valuation. In the second half of 2025, the Philippine Stock Exchange declined sharply. The trigger was a large-scale corruption scandal linked to the flood control project. Key elements included alleged irregularity worth hundreds of billions pesos, public accusation by a former lawmaker, claim that reached to the highest levels of government. As uncertainty spread, the PSX index fell to pandemic-era levels. The problem was not only corruption itself. Markets have priced corruption before. The real issue was this: no clear answer to who would be held accountable. Entering 2026, inflation has eased. The central bank has signaled possible rate cuts. Short-term market rebounds have appeared. Yet, foreign investors remain cautious. Why? Because long-term capital does not enter market where rule enforcement is uncertain. Investors are asking, not just will the economy grow, but what happens if powerful interests are involved in wrongdoing. However, the market is not broken. This is an important point. The Philippine market is not dead. IPOs have taken place. Infrastructure and consumer demand remain strong. Capital raising activity has improved. This tells us something critical. The economy itself not the main problem. The bottleneck is governance and credibility. Calling Philippine equities cheap missed the point. What we are seeing is not a value opportunity driven by fundamentals. It is a confidence discount. If the country delivers credible investigations, transparent judicial processes, clear accountability regardless of status, the market could be re-rated quickly. Markets can price bad news. They struggle to price uncertainty. By the way, my personal stance is very simple. I do not chase the short-term index rebounds. I maintain diversification, and I keep long-term scenarios open, confidential of governance outcomes. Markets fall on fear, they recover on trust. This is not unique to the Philippines. It is a lesson repeated across emerging markets. That's all for today. Thank you very much for listening to the Philippine Market Wrap. I'll see you again in the next episode. Salamat kayo. I'm Pin.